So I've been forgetting to wear this hat. Why didn't you guys remind me? Remember, I promised that I would wear this hat in every single video until the bear market was over, and unfortunately, the bear market is not over yet. So back goes on the hat. Anyways, welcome back everyone, and today it is time to finally reveal my 10K YOLO. So this was a bit confusing actually because it ended up being more like 12K Canadian, which works out to be just under 10K American. So it's the exchange rate is gonna vary back and forth, but just for the sake of simplicity, let's just call it 10K American. Yeah, don't hold me to the exact amount. In any case, before I reveal this YOLO play, let me just talk about some macro stuff. And if you don't want to hear the macro stuff, I'll put a time code down below so that you can skip right to the section where I reveal. But I do highly recommend you listen to this intro part because it is very important and it kind of justifies, where my thoughts are or why I made this decision to YOLO and stuff like that. Anyways, if I may, I'd like to update my prediction that I made in last July in a video I made last July. So if you recall, I made a video predicting the bottom was going to be in the stock market in the next 60 days from the end of July. You know what? I think I'm going to update it, and this is not cheating because I'm substituting it with an even stronger and stricter kind of condition and prediction. So you'll see what I mean, right? So my updated prediction is that I believe that the June bottom was the market bottom of this cycle. So that means I believe that we will not go back down to those levels in the foreseeable future. And I'm saying this as the market is kind of going back down, but I don't think we'll hit the June lows again anytime soon. Maybe in the next cycle, 3-4 years from now, but even then, it's hard for me to imagine doing that. But anyways, this cycle, I don't think we're going back. So in case you need a reminder, that was around June 16 for the S&P 500, which fell to around 3,600 points. And June 18th for Bitcoin, which I think it touched around 17,500 US dollars at the lowest point. So several reasons why I think that was the bottom, right? So if we look at lessons from 2020, the 2020 crash was really caused by fear of a total economic shutdown as a result of the pandemic. And that was, nobody knew what would happen then because it was literally like a once in 100-year event, right? Although the macroeconomic environment was still really bad by the time summer of 2020 rolled around, the market had already started to rebound. And this time, the crash in 2022, the crash was instigated by inflation fears. And from the latest CPI report, which came in for the United States at 8.5%, we saw inflation come down significantly, and it's actually lower than what analysts expected, which was 8.7%. And a big part of this was due to oil prices, since everything we buy tends to be correlated to oil prices in terms of just the general inflation rate, because you need oil to transport everything. And oil is a part of just our economy. It's just one of the core components of our economy, right? So oil has been coming down recently, sitting at currently around $90 per barrel. And without oil skyrocketing again to, I think the peak was around $120 back in June. Without it skyrocketing again, I really do have a hard time seeing inflation take back up in a significant way. And remember, inflation is measured on a year-over-year basis. So that means that if we're comparing it to a larger number from the same time last year, then it's going to be hard to put up a large number once again. And what I mean by that is that, for example, if you look at this chart, last year around this time, inflation was around 5% compared to 2020. So it was August of 2021 compared to August of 2020, it was around 5% year over year, right? So it started to skyrocket in October of 2021. This time, by the time we hit October 2022, we're going to be comparing it to October 2021, which means that we're going to be comparing it to a high number, which means that we're going to most likely not be able to put in a really high number again unless inflation really starts to pick up. So this is great news because as inflation trends down, I do see the Fed gets softer in terms of their rhetoric and in terms of just their rate hikes in general. So in my opinion, it's going to be really hard for the Fed to raise interest rates aggressively now because they're coming up against the wall. And what I mean by that is that the US has $30 trillion of national debt. And by raising interest rates, they're really just making it hard for the government to service that debt. And never mind, it's just going to crush the economy and it's just going to stop the liquidity from flowing, right? So according to the latest stats I'm hearing, the market is still pricing in around a 30% chance that the Fed will do a 75 basis point rate hike in September. And I really don't think that that's going to play out. I think that's very unlikely. It should be much lower than 30%. I think that they'll just stick with 50 basis points in September due to the reasons I just described, right? Because if they go too aggressively, they're going to crash the economy and send us into just basically a depression, even like not just a regular recession, but actually a depression. So once we draw closer to the next FOMC meeting, it'll become more and more clear that they're going to do 50 basis points instead of 75, in my opinion. Again, I could be wrong, but I do see a small rally as we start to price out the possibility that there's going to be a 75 basis point rate hike. So I know this opinion will attract some hate because a lot of people are just dying to tell me how the economy is doing terrible right now, and that's why the stock market and crypto markets must go down, right? What I have to say to that is that please remember the stock market is forward-looking. And what I mean by that is just because the underlying economy is bad doesn't mean that stocks can't rally. So just like how in January people were confused on why stocks were falling, even though the economy back then was doing pretty well, at least compared to now, the reverse is also true, right? Just because an underlying economy is doing well, that doesn't mean that the markets can't fall. So you got to ask yourself, in 6 to 12 months from now, is the economy going to be better or is it going to be worse? So if you think that things are going to be even worse than now, 12 months from now, then maybe you're right. Maybe this is a bear market rally and then we're going to all-time, well, not all-time lows, but cycle lows again. But I'm making a bet that things are going to get better from now. And in the next 6 to 12 months, I think that inflation is going to come down. The Fed is going to be less aggressive. And hopefully there's some type of ceasefire resolution in the Ukraine conflict, although that one is quite the wild card. So nobody knows for sure what's going to happen there. But, we'll see that kind of play out and see how that goes in 6 to 12 months. And at least we'll have some more answers as to what the end of this conflict will look like. But anyways, due to those reasons, I'm comfortable sort of just going all in essentially, or nearly all in. So as of today, I'm about 90 to 95% in. I do have a little bit of cash left, but very little, less than 10% cash. And even that small amount of cash that I still have, I plan on mostly just deploying all of that, the rest of that in the market in the next month or so. So the big reveal now. Recall the short list of choices that I gave in the last video. So in no particular order, they are Tesla, Shopify, Google, Amazon, and Hut 8. And drum roll please, my choice was Hut 8. So I bought 3,000 shares of Hut 8 at an average price of $4 Canadian per share for exactly 12,000 Canadian dollars. Now, it's nice how those numbers worked out and it's easy to remember for me. And as always, whenever I buy a stock, I'm down immediately on it. And it actually went down quite a bit after I bought it. Pretty much right away, but that's okay. As I said, this is more meant as like a 6 months kind of time span. Like I am playing it for the end of the year, which I think that there will be a Bitcoin rally as well as a NASDAQ and S&P 500 rally. I do want to realize some profits though, if I do make some profits by the end of the year, just because there are some other projects I want to kind of spend money on. But let me go through a brief rationale on why I chose Hut 8. So Hut 8, if you don't know, they're a Bitcoin miner, the largest in Canada. And recently they just reported their earnings and announced that they've increased the amount of Bitcoin that they're holding on their balance sheet. So this is good news because it shows that they don't have to sell all the Bitcoin that they mine to pay for their operations, and they're actually able to keep some of the Bitcoin that they mined. I've been watching the correlation between Bitcoin and Hut 8 stock for a while, and usually when Bitcoin moves, Hut 8 moves like twice as much. So if Bitcoin has a end of the year rally, like I'm predicting that it will, then Hut 8 is like a leverage bet on that. And this is why I chose Hut 8 as opposed to a Bitcoin ETF, let's say, right? So as for why Hut 8 and not some other Bitcoin miner like Marathon or Riot, I like Hut 8 because it's Canadian, and this is not just like out of patriotism or anything like that. I am Canadian, but there's reasons, right, which I'll tell you now. So a lot of the American miners are based out of Texas, and if you think about it, Texas is really a terrible place geographically to mine Bitcoin because it's really hot there. Bitcoin mining generates a lot of heat, and you need to cool your equipment. So living in a hot place or doing it in a hot place makes it more difficult to cool your equipment, right? And also, the Texas power grid is not exactly known for its reliability. So during a heat wave like we experienced just a month ago, it was really pushed to the limit. And I'm sure a lot of you remember what happened in the winter, last winter, when it just like went down and a lot of people had to like burn their bookshelves to stay warm, right? So yeah, the Texas grid, not a lot of faith in it, I'm afraid. Because of all those reasons, miners just still go there though because it's like a crypto friendly place in terms of legislation, like in terms of tax policy. However, I just prefer, with everything else being equal, to be exposed to the Canadian market instead because in Canada it's much cooler temperature wise, and it's also in a jurisdiction that I personally know and trust. For example, Russia is also very cold, but I don't know if you want to trust like a Russian Bitcoin miner if they even exist out there. Anyways, in terms of price targets, during the last peak when Bitcoin hit its highs of around 68 to 69k USD, Hut 8 hit around $20 Canadian. So I've been watching the TSX Canadian version, so if you're American, you can work out what the numbers are for the American version of Hut 8, but I'm just going to use Canadian dollars for the Hut 8 price targets. But anyways, if it hits $20 Canadian again, that'll be a 5x from where my cost basis is now. So that's kind of like the best case scenario. Granted, I think that the chances of Bitcoin hitting all-time highs again in 2022 are rather slim, but you know, there is a chance. That's just the idea of the potential, right? If we were to go by the same logic, let's say if Bitcoin does hit all-time highs again, Hut 8 has more Bitcoin on its balance sheet compared to before, and they also have way more Bitcoin mining equipment than they did last time when Bitcoin was at an all-time high. So can it go above $20 per share if Bitcoin hits around 70k again? I say yes. But again, this is just hypotheticals, right? I'm not saying that it will. And this is not financial advice. But remember, this is not only a bet, as I said, on Hut 8, but this is a bet on Bitcoin as a whole. So it's a leveraged bet, as I said. And historically speaking, whenever Bitcoin has been below its 100-week moving average, it's been a great time to accumulate Bitcoin. And by extension, I think you can apply this to Bitcoin mining stocks as well. If Bitcoin hits 100k, that's like a 4x for Bitcoin from now. And if Bitcoin hits a 4x and Hut 8 is twice as volatile, does that mean Hut 8 will do an 8x from here? So if it does an 8x from here, my 12k turns into, let's say, 100k or just less than that, a little bit under that. Yeah, that's the potential, right? And I know all of this is hopium, but I'm just saying it could happen. And I'm not expecting it to happen, but it could happen. And knowing me, I'll probably take my profits before it absolutely hits the peak. But if this goes right, I stand to make quite a bit of money. But yeah, it is kind of like a YOLO bet. So by all means, like, I'm not recommending anyone do this, and this is not financial advice. Please don't follow me into this, right? I don't want to get sued. But yeah, anyways, that's the video. That's all I wanted to say. If you enjoyed this video, be sure to give me the like, and consider subscribing if you haven't already. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.